Hey everyone! In today's video, we're testing a powerful yet straightforward trading strategy that combines the moving average with the ADX to spot high-probability trade opportunities. We'll code the entire strategy in Python, optimize it using Freqtrade, and run backtests to evaluate its effectiveness. So, let's dive right in. Let's start with the foundation of this strategy, moving averages. We'll be using a 20-period SMA, but with a twist. Instead of the usual closing price, the 20-high SMA is based on the high price of each candle, and the 20-low SMA is based on the low price. If the price closes above the 20-high SMA, it signals a potential long trade. If the price closes below the 20-low SMA, it signals a potential short trade. Now, to avoid trading against the trend, we add a 100-period SMA as a trend filter. We only go long when the price is above the 100 SMA, and we only go short when the price is below the 100 SMA. This keeps us trading in the right direction, reducing unnecessary losses in choppy markets. Next, we bring in the Average Directional Index, ADX, a key tool for measuring trend strength. Unlike moving averages, which show price direction, ADX tells us whether a trend is strong enough to trade. If the ADX is above 25, it means the trend is strong, and we have a better chance of catching a solid move. If it's below 25, the market lacks momentum, and we avoid taking trades. Finally, we use the average true range to filter out low volatility periods. ATR measures how much the price moves on average over time. A high ATR means strong price movements, good for trading. A low ATR signals a quiet market, which can lead to false breakouts. By avoiding trades during low volatility, we increase the chances of catching real momentum-based moves. Now that we've covered the key indicators in our strategy, let's put them all together and see how we can apply them to analyze trends and generate our trading signals. To enter a long trade, we need to meet all of these conditions. 1. The close price must cross above the 20-high SMA. 2. The close price must also be above the 100 SMA, confirming we're in an uptrend. 3. The ADX must be above 25, which confirms a strong, trending market. No weak trends allowed. Since we're working on a 4-hour time frame, we'll also check the one-day ATR. It must be above 3% of the current price, which ensures there's enough volatility for a reliable trade. Once all of these conditions are met, we'll enter the long trade on the next candle. To exit the long trade, we'll use the following condition. We don't exit immediately when the price crosses below the 20-low SMA. Doing so would be too quick and could lead to unnecessary exits. Instead, we wait for additional confirmation by combining it with the ATR, multiplied by 0.7 before closing the position. This ensures that we're not reacting to small pullbacks, but instead exiting only when the market truly shows signs of reversing, locking in our profits. To enter a short trade, we need to meet these conditions. 1. The close price must cross below the 20-low SMA. 2. The close price must also be below the 100 SMA, confirming we're in a downtrend. 3. The ADX must be above 25, ensuring a strong trend. The one-day ATR must be above 3% of the current price, confirming sufficient volatility for a reliable trade. Once all conditions are met, we'll enter the short trade on the next candle. We don't exit immediately when the price crosses above the 20-high SMA. This could result in premature exits. Instead, we wait for additional confirmation by combining it with the ATR multiplied by 0.7 before closing the position. This helps us ride strong trends while avoiding false exits and noise in the market. Now that we've covered the strategy, let's take it a step further and see how to optimize and backtest it using Freqtrade, a free open-source crypto trading bot built with Python. If you want to learn more about Freqtrade, check out the link in the description for a complete Freqtrade course. Here's our approach. We'll test our strategy on the 4-hour time frame. We're splitting the data into 2 parts. In sample data. 8 months. We'll use this data to fine-tune the parameters of our strategy. Out-of-sample data, 4 months. This data will test our optimized strategy on new, unseen data to see how well it holds up in real market conditions. We'll focus on optimizing the following important parameters. Short SMA period. Adjust the sensitivity of the 20 high and 20 low SMA. Long SMA period. Helps define the overall trend direction. ADX sub-period. Fine-tunes how we measure trend strength. ADX threshold. Ensures we're only trading in strong market trends. ATR mult. Controls how much ATR volatility filtering is applied to exits. ATR price threshold. Ensures the one-day ATR is high enough for a reliable trade setup. Cross-rolling window. Defines how long the EMA crossover remains valid before a signal is confirmed. We'll use Freqtrade's HyperOpt feature to find the best parameter combination for maximizing profits while minimizing risk. Once we've optimized the settings, we'll run a backtest to check how well the strategy performs with the new parameters. All right, now let's dive into the backtesting results for our strategy. We tested it on GRT perpetual futures using a 4-hour time frame over 1 full year, and here's how it performed. Total profit, a solid 475% return. Long positions, contributed an impressive 234%. Short positions, added another 241% to the total. Market change, minus 1% over the same period. But what about risk? Maximum drawdown, MDD, kept to just 11%, which is well within a reasonable range for a high-performing strategy. And here's the cumulative profit graph. As you can see, it shows a steady upward trend, exactly what we want in a robust trading strategy. We used 8 months of in-sample data to fine-tune our parameters, 4 months of out-of-sample data to verify its performance on unseen market conditions. If you'd like to explore this strategy further, check out the link in the description below. I've also developed a pair-optimized version of this strategy. This version allows multiple trading pairs to run within a single setup, each using its own optimized parameters for better performance. It helps diversify risk and reduce maximum drawdown. If you found this video helpful, don't forget to subscribe, hit the notification bell, and share it with your friends on WhatsApp, Facebook, or Twitter to help support the channel. Thanks so much for watching, and I'll see you in the next one.